What's going on out there? It's April 9th. I'm Frank Curzio, it's the Wall Street Unplugged podcast, where we break down headlines and tell you what's really moving these markets. We're getting Daniel Creech today to tell us everything what's going on with the markets and tell you exactly how to make a fortune on everything that's going on. Daniel, what's going on, buddy? How's everything?
Everything is great. It's another beautiful Wednesday, Frank. Hello and happy to everybody. What's moving these markets? Tariffs, Frank. Liberation Day. China.
China.
Retaliation. I have to say, this morning, so I know a lot of people get upset about Trump and his personality. I feel for you. But Frank, I literally laughed out loud this morning at the office, and I couldn't wait to talk to you about this. Trump tweeted. Did you see Trump's tweets today?
No, I didn't see him today.
If you could pull him up, well, I don't know. You don't have to be a member on Truth Social, but he tweeted and he said, "Be cool. Be cool, everybody," because not only is China, but now Europe is retaliating with us and our tariff back and forth. So I'm sorry, let me pull this up. So he says, "Be cool. Everything is going to work out well. The USA will be bigger and better than ever." Frank, when you hear "be cool," what do you think of? Because I was upset. Nobody referenced on TV that I was watching the movie that I was thinking of. What do you think of? And you subscribers email me, Daniel@CurzioResearch.com. What do you think of when somebody says "be cool"? What movie?
Isn't like Brad Pitt? Like Brad Pitt for some reason. Be cool. I don't know why. It's a movie or not. I gotta see. But yeah, be cool. Be cool. Everything's gonna be everything. Nothing to see here. That's Naked Gun.
Okay.
That's my Naked Gun. Nothing to see here. But
Pulp Fiction. This is the family show. You're allowed to get away with this.
Yes.
Remember when the couple is robbing the diner? And he opens that scene and says, "This is a robbery, be cool."
Yep.
That's not even the best part. The best part is when Samuel L. Jackson puts him at gunpoint and tells him to tell his friend to be cool, Honey Bunny. In the midst of market chaos, everybody needs to go to YouTube or wherever on your listening device and listen to that. That scene, the entire scene is probably 6-ish minutes, Frank. You need to do that amongst volatility. That is that's my Dr. Phil moment of the day.
Who was the guy's name? Honey Bunny? Who was saying Honey Bunny? Honey Bunny, be cool, Honey Bunny. Who was that?
Well, that was the guy that Samuel
Roth
that was
or something? Yeah.
Oh, yeah. I don't know.
He's
Yeah.
great actor, that guy.
Anyway, so let's get to something important, but be cool, everybody.
Be cool. Everything's going to be fine. But I tell you, everything's not fine. I mean, the shit's really hitting the fan here because you're seeing a lot of things that the president was bragging about, like lower interest rates. The 10 years coming down just like I planned. It was great. Yeah, okay, but now it's going back up. Okay, you have the VIX at 50. Remember, 30 was that benchmark. When it hits 30, 35, that's when you have to buy stocks, and it's 50 right now. The 10-year Treasury yield is what, 4.4%? It was 3.9% in a blink of an eye, I think, yesterday, the day before? And it's scary because there's a lot of, when you see the bond market going crazy, it's scary because a lot of people don't know what's going on under the hood. And this is what happened during a credit crisis, kind of COVID. You know, it's when you see credit spreads and everything's okay, I mean, you could see there's warning signs. Now there's warning signs that there might be something bigger. And some of them are saying this is a basis trade. I'm hearing from my sources. It's a $1 trillion trade, meaning that's unwinding, right? And when these things unwind, it can seize up the markets where you own actual bonds, you're selling the futures. So if it unwinds, you're forced to sell the bonds. And you look at the muni bond market, which looks terrible. David Faber did a good job of CNBC covering it. It's almost like, this forced liquidation. But when you see everything going down at the same time, that's when you have to worry, right? There's really no safe havens. When you've seen oil, bonds, stocks all down, and yes, crypto has held up a little bit, gold has held up a little bit. But usually when you see those factors, oil, bonds, stocks all down at the same time, it's like a liquidation, something's going on under the hood, and it's like credit crisis, COVID shit, which has people worried and should have people worried. I mean, we could see further downside here. And one thing that gets lost, Daniel, in these tariffs is how much foreign investors own. And this is what was, I believe, one of the biggest catalysts that were not talked about the last 2 years as our market surge. And everyone's like, it's going higher, it keeps going higher, it keeps going higher, right? And you're seeing a flood of money and you're seeing, government spending and stuff like that. And we get it. But a lot of the 18% was a record for foreign investors. 18% of them own the U.S. stock market. So that's cool. And U.S. is still, even today, I think one of the best markets to own. You might have said that a little bit before tariffs, where Europe was making a comeback first time, seems like forever. And China's making a comeback. I'll cover China in a minute. But when you're looking at 2010 at 10, 12%, now, I mean, foreign investors, at 18%, that's a very, very big number. And now you're seeing this, question the idea. And Goldman has a great note about this, saying they question the idea of U.S. exceptionalism and saying maybe we need to reduce U.S. equities. That could be contributing to this as well. But you're seeing, things that you normally don't see, where you could have said, okay, the market's down a ton, but it's fine, right? I mean, companies still spending. You're seeing companies remove guidance a little bit, which is expected because of the uncertainties. No one knows what the hell's going on because Trump, depending on when he feels like tweeting, what's
cool,
going on.
Frank.
Be cool. Everything's fine, but just be cool.
I'm a child. I'm sorry.
Be cool. There's just a lot going on under the hood, and it seemed funny. I don't know if you could. Did you catch what he said with the Dodgers?
Well, because you showed me. What about the introduction?
He was talking about basically.
Oh, we got some. I'm not going to introduce them.
Yeah, he's like, and we got some politicians here from California, and I'm not going to introduce them because I don't like them. Everyone starts laughing. He's like,
don't like them that much.
Yeah, but I don't like them, so I'm not going to say their name or whatever. And even the Dodgers will laugh, and he's giving tribute to Ohtani and stuff like that. But it's just, it's crazy, it's funny, it's insane at the same time. But you have to be worried about these markets here. I mean, is it? Look, I'm going to be honest with you. If you have a 1 year plus time horizon, which is like 20 years in investing terms now, I mean, that used to be obviously back then, but now we have, you're trading spiders on same days and stuff like options and shit, which is crazy. So everyone's like, if a company comes out and says, hey, this quarter's not going to be good, but we're going to make it up the rest of the year, the stock falls 25%. Nobody gives a shit that 3 months later it could be good, right? That's how quick the markets react. And we have these algos. And if you want proof of the algos, holy shit, did you see the market move? And was it yesterday already? I'm losing track of this, but how the market was getting annihilated. And one rumor about Trump ending tariffs, 90-day extension, led to an 8% plus swing in the markets. It was the largest one-day point swing in the history of the S&P 500. Now, you could look at that several ways. Josh Brown was on CNBC saying, hey, this is your chance to take some off the table because there's more shit going on. But another thing is, which I look at it, is we're talking about a problem that could simply be erased by a tweet, by a Truth Social post of him saying, hey, everything's cool with China right now. Everything's cool with Europe, and Europe is retaliating, but it's not as bad as it was, just kind of like, it's kind of weak, their response, to be honest with you. So it's not like, even Cramer was saying it's more of a positive on TV. And the reason why I'm watching so much of this on CNBC and Fox, because you want to get the sentiment out there, it's what everyone's watching. That's how you gauge, the consensus and the sentiment. But when I'm looking at this and I see that, it's a risk that could easily be taken off the table. But what is scary is we saw interest rates coming down, which is great for the overall market. Now they're going back up. And that's leading to more concerns. Hey, is there something more going on with the bond market? Is something underlying that we can't see? And that's what leads to an ultimate, capitulation, market collapse. That's what people are concerned about. That's why we're seeing these massive moves. We're up in the market right now, but it was up a lot higher. It came down. Yesterday, I think it was up a lot higher. Or it's down, then went all the way up, and then it came back down again. It's crazy, right? You don't see that happen during normal events as someone's been covering this for 30 years. You don't see that happening. That's not a sign of a normal market. It means something's going on under the hood, and that's what's scaring people because nobody knows what's going on under the hood because a lot of shit's going on, leverage, and again, let's see how this unwinds. But just a lot of speculation to what's going on, but you should be concerned. And if you have more than a year time horizon, I think stocks are going to be a lot higher, but we could see more pain in the short term because, again, uncertainty is the death of stocks. We have more uncertainty than we've ever seen. No one knows if we're going to have 5 cuts, 2 cuts, no cuts, or if we're going to grow tremendously, right, into next year. I mean, they're pricing in the same percentage as all those outcomes, which I've never seen ever. I mean, you see outcomes, all right, 30, like what was that, 15% chance of a recession. I think now Goldman might have it up to 30 or 40%, slightly, and then you adjust. Just like, rate cuts and future rate cuts, where the futures, the Fed futures are implying, 2 rate cuts, and maybe that goes to 3 rate cuts, maybe that goes to 1. But to be pricing in the same amount of chance happening, whether it's going to be 2 cuts, whether it's going to be 5 cuts, or whether it's, maybe no cuts or growth, it just tells you no one knows what the F is going on. And it's why you saw the biggest retailer in the world, Walmart, remove guidance. You saw with Delta remove guidance, and you're going to see that from companies across the board. The good news is they removed guidance, Daniel, and those stocks went higher, maybe implying that, hey, Delta already got cut in half. Maybe this was assumed that they were going to do this, but when you remove guidance, again, that's more uncertainty. So how do you buy Delta not really knowing what the outcome or have an idea of what the outcome is going to be? Because that's what stocks trade on, the idea of what's going to happen in the future. Now it's more cloudy than it's ever been, and it's going to be like that over the past next couple of months, which makes the markets very, very difficult to invest in. But for long-term investors, I think buying some of your favorite names in the larger stocks like really industry leaders at 30% discounts right now, and holding them for 12, 18, 24 months, or even for the next 5 years, I think you're going to do very well. But uncertainty short term is almost a guarantee here.
Yes, absolutely. Frank, I shook my crystal ball, and I have some stuff to explain to you and everybody else about what's about to happen here. Being halfway facetious, no doubt. Frank, I'm rereading through this bond fiasco because we have talked about this. The 10-year going down was excellent, and it's good for nearly all interest rate yields, let's say, painting with a very broad brush. And also, it was literally what Trump, and more importantly, in my opinion, Secretary Bessent has been saying and focused on. Now that it's going back up, to your point, what's going on? There's some great articles about this blow up in the bond market going around. And I hate to tell you this because I don't have the exact answer. I'm simply telling you they are not telling us everything. And here's a quick timeline, Frank. So yields spiked, and we're starting to see these rumors of, hey, somebody's blowing up or what's going on. Mm-hmm. Well, and you just explained it. Hey, they're in these Treasury and swaps. And I'm still trying to figure all that out. But the basis is this. You have the same song and dance. You have a group of hedge funds, it sounds like, that got over leveraged. They're 20x levered, okay? Now, don't take that out of context and just say, oh my gosh, 20x levered is reports-ish, blah, blah, blah. And that got severely higher. Okay, so guess what? Same old song and dance, Frank. When everybody gets leveraged up and the trade goes against you, you got to head for the hills and boom. Rising tide lifts all boats. When the tide goes out, you find out who's swimming naked. The key here is I don't think this is over because I don't like the timeline of how it's just getting trickled down to us in the viewership. Because you've had some headlines around there, and what really intrigued me, Frank, was Treasury Secretary Scott Bessent went on Fox Business this morning with Maria Bartiromo. And I don't want to exaggerate here, but when I was listening to the interview, Frank, it did not feel like Maria was asking him or pushing him towards this yields and what's going on with the bond market. Mm-hmm. And he came out there and said, hey, some people are getting hurt and they're worried about this. I don't think it's a crisis. I'm not saying he's lying. I'm simply saying when the politicians tell you not to worry and there's nothing to see here, the fucking place is on fire, people. Okay? And Zero Hedge, who I'm a big fan of, and they're crazy right-wingers, so take that with a grain of salt. But they have some good charts here and it's making the rounds on the business community. Because Frank, it's getting passed around people to us, not just on Zero Hedge. And they just have some good stats. The point is, there's some people that are very levered. We'll see how this plays out. But in the short term, there is just way too much going on for you to, anybody that's saying, hey, this is a turning point is either lying or they're just trying to goose their book so they can get out of a trade. It's absolutely crazy. There's just a lot of uncertainty, and it's humbling to say, you know what? Frank, if the last couple of days didn't humble you, then I think that you really haven't learned anything in this market because you were talking about the intraday moves, Delta, oil, all that kind of stuff. Apple being up, well, hell, it can change. Apple was up a few seconds ago. But, you know, the big question is this over? No. Who blinks first? In my opinion, the Fed blinks first. And here's what they're going to do. I don't think they cut rates first. I think they do quantitative easing. I think you can use any excuse you want to start putting liquidity and bonds, easing the Treasury yields in there. I think that'll be a good thing. And I think we'll negotiate a lot. The hardest thing for investors to do, including myself right now, is you can't take tariffs as a one and only, Frank, because they're not part of a one and only plan. Like it or hate it, they're trying to, the Trump administration is putting together a puzzle. Tariffs are a big piece, and that's the piece they've led with. Then you got tax and legislation, all that. I understand, and I'm not saying it's going to work. There is risk, but you can't just take it as, man, if people don't buckle to these tariffs, what's going to happen? Well, because we're going to bail out farmers. You know, there's just so much unfolding here. And I just, you know, sometimes the thing is, you don't know what's going to happen next. These intraday moves are crazy, and it's a little bit more like gambling than trading or investing right now in the markets.
Look, everybody was caught off sides because they didn't think Trump would actually implement this stuff. And not only they didn't think Trump would actually implement it, they didn't think countries would fight back because they really forced themselves into not just recessions. Some of these countries are going to go into depressions, right? And it's going to happen. It's going to be that bad for them. I mean, you're selling all your products into the U.S. markets and a lot of your products into U.S. markets, and we're cutting you off, right? We just want, you know, tariffs to be fair, right? Reciprocal. And what's resulting is, I mean, even us, if you want to talk about a humble moment, and, you know, I love small caps. And if you look at the data, I recommended a double long ETF for the Russell 2000 3 weeks ago. 2-3 weeks ago, saying that, okay, and this is based on data. It wasn't based on, oh, I have a feeling, I'm trying to catch a falling knife. It's like every time we see the Russell over the past, pretty much the past 15 to 17 years, I think it is, that when they fall, it retraces 17, 20%, and you have this wide of a gap between large caps. And considering that they shouldn't be hurt as much as towers because most of the business is done in the U.S. already, I was like, here's a really good time. We're going to see a snapback because once Trump comes out or whatever and they say, okay, we're going to solve this, right? You didn't see that much, so many countries retaliating or this being long and drawn out. I mean, it really caught everyone off sides, including us. It was a humble event. I was like, holy shit, we got wrecked on that trade. And I get it. And that happens because, so my point is, even when you're looking at the data, you're looking at, wow, almost every single time you look at the VIX at 35, it's a buying opportunity. It's fucking 50 right now, right? So everything gets blown out of the water. That's why people say, oh, history normally rhymes. History hasn't rhymed. If you look at historical, any book that's ever read, throw it in the fucking garbage about investments because none of this shit's going on. We've never thought we'd spend, all right, fine. You spent $3.5-4 trillion because of COVID. You locked down everything. That's fine. You gave people free checks. You gave businesses free checks. You don't have to pay back, whatever. I get it. But at the end of 2020, all of the major indices were at all-time highs. Markets were at all-time highs. Almost every single asset class was at all-time highs. You're looking at housing, you look at collectibles, everything was on fire at the end of 2020, right? So remember, March 2020 is when, COVID really hit, but we figured it out, unleashed this massive amount of stimulus. And then what do we do after in 2021? We unleash in the next couple of years another $5 trillion in stimulus, which is insane, right? So, all that money flooding the market's going to go somewhere. That's why all your friends who are, cops and firemen, they have 2 Mercedes in their fucking driveway. You're like, what's going on here? Everybody's rich. Right now, when you see that drying up and that coming out of the market, you can't assume, even with Doge, that we're not going to see, the market pull back because it's resulting in less spending. But you're looking at these markets going, wow, normally when this happens, this happens. It's not the case. It hasn't been the case for the last 2-3 years. And people want to look historically when this happens. Historically, it'll look like the Russell was a great trade, and it wasn't. Right. So be very, very careful. Even if you're a trader, when you hit these, 200-day moving averages, it's a good time to buy. Throw that out the window right now. I mean, there's a lot of stuff going on in the hood that you really don't know. And we're still trying to figure out because when markets crash, it leads to other things. Daniel, you hit the nail on the head. When you're looking at tariffs, it's not just tariffs. I mean, so many things. Where 18% of our economy accounts for foreign investments, and they're pissed at the U.S. Are they going to remove that? Yeah. I mean, is China going to sell treasuries? I don't think so. And I don't know if anyone's paying attention to China. And when I say paying attention, I'm really paying attention. Because we could see a massive pullback, and it could result in a huge pullback in gold prices as well. Because we're under this notion that, they're going to sell treasuries. And I think they were at the high at peak of 1.2 trillion. And now it's like 750 billion. And they've been, this is over the past, several years, low in there. But for them to sell all their treasuries to get back to the U.S., one, they have to put that money someplace. And where would they put it? And people are like, well, they're going to buy gold. Gold doesn't pay interest. You're going to lose 4% on $750 billion, right? So, and not only that, they're probably selling, if they're selling treasuries, hey, it's cost that piss at the U.S. They need money. They need money. Now, if you look at the China thesis, right, you have, China's government trying the hardest over the past 24 months to inflate its economy. They've been doing, everything they possibly can, cutting its reserve requirement ratio for banks, cutting its reserve repo rate, lowering mortgage rates, right, doing everything they're supposed to. Quick primer, lower rates help increase consumer and business spending, which leads to stronger economic growth. Strong economic growth leads to higher stock prices. It also creates more tax revenue, which makes it easier to service debt. Okay, so if you're looking at lower spending, Doge isn't going to solve our problem because we're not going to be able to stop spending. We have so much spending. It's where we want to try to inflate this market without creating inflation, but have this economic growth because economic growth solves everything. And Daniel and I were talking about it. It's like if you could have the shittiest continuity between a basketball team, a football team, or whatever. If you're winning, it solves everything. Everybody's happy when you're winning. No matter what, you're happy when you win. And once you start losing, then the shit hits the fan. So when you're seeing all the stimulus coming in, this is why so many pundits, including David Tepper, was like, I'm bullish on China. And this was from September because he said, listen, they just announced a bazooka plan, right? Which is, putting this thing even on steroids. That thesis has totally gone to shit after Trump unleashed tariffs. And when you look at China, and that's the growth model, like, hey, we're doing everything we can to stimulate the economy. Now we just cut you off from selling from all your revenue. Not all your revenue, but a big portion of it. So China is still a disaster. I mean, if you look at non-financial debt levels, we're already insane, over 300% of GDP. The government is reallocating money from schools and hospitals to pay off the interest on its debt. They're going after individuals, say, for your back taxes. Right? The real estate market, forget about it. People have been talking about the real estate market and saying, Frank, I know that's priced in. Is it priced in? Is it? Because I could tell you 10 days ago, no one really talked about this news because everybody was talking about tariff. Vanke. Okay, this is a government-linked developer for China, known as building China's largest cities. They reported $6.8 billion annual loss for 2024. This just came out 10 days ago. So it's the company's first full year loss since its IPO. You know when that was, Daniel? 1991. This is current. This isn't like, oh, well, I get it, Evergrande, I heard that story. No. So the reason stimulus plan, it's not working to help prop up the real estate prices or the economy, right? It was working a little bit. I mean, if you're looking at further proof for real estate, values are still plummeting. Households in financial distress, they're being forced to sell their properties. Apartment developers are on the brink of collapse. So it's a massive leverage years ago and rates are much, much lower. Now they have to refinance and can't. So you say, okay, China's market's cheap. Let's get some foreign investors in here. No way. I mean, private equity hedge funds, they did this 10 years ago. Most aren't even thinking of investing this because they got fucked over. I mean, the offshore creditors only received 26 cents on the dollar on average after all the offshore debt restructuring that would need to take place over the past few years. This includes Evergrande Group, China's largest property developer, defaulted on more than $300 billion in debt a couple of years ago. Country Garden, Sunac, two more property giants in China defaulted. This was in 2022. So now you have these tariffs and what happens, right? You're cutting off China's bloodline for growth, which is the sole thesis of why you invest in China, right? I mean, it's like you're building this framework for a house. Okay, you see, right, that the plywood's going up. It's nice. It's size of 2x4s. It's beautiful. But now all of a sudden the cement underneath is cracking. It doesn't matter what you do or how nice that house is going to look. It's going to fall down. I mean, it's not going to matter, right? So that's China right now. And yeah, Dan, we've heard this. Like, China's dumping all of its treasury holdings to screw the U.S. They really can't. They could lower it, but if they lower their exposure, again, which they've done the past few years, that's fine. But if they sell those treasuries, where are they going to put this money? Because you're earning a decent rate on it, and people are like, oh, it's going to go to gold. I don't know about that. I mean, it's going to go to gold a little bit. But also, if they sell treasuries, what's it going to do? It's going to weaken the dollar, which will also weaken their currency relative to the dollar, and their currency is pegged against the dollar. Meaning China may have to devalue its currency if they sell their treasuries, which will probably push GDP into the negative for the first time in the country's history. So if this sounds really crazy to you and it's a dire circumstance, just do me a favor. Look at the 1-month chart of the USD against the yuan and that exchange rate. I mean, it's going to scare the shit out of you over the past month since they announced these tariffs. But what is the thesis to invest in China right now that's been an absolute disaster, totally massive leverage? Given a lifeline, the government stimulating, okay, fine. And you saw it happen. I mean, GDP went from, I think last quarter, and they should announce their next quarter GDP. I think it's Q1 GDP, I think in the next couple of weeks. Their last quarter was 5.4%, which was very good. High, they have a 5% benchmark really for this year. So it's kind of like 5% benchmark for GDP for China is kind of like our benchmark for inflation of 3%, right? Higher than that, you get a little scared. Lower than that, it's kind of good right now. It used to be 2%, it's not 3%. But 5%, it was like an 18-year high. But now you just threw the whole thesis down, just flushed it down a toilet. So, when I look at China, what's going to happen? I mean, Treasury Secretary just came out yesterday, said Chinese stocks will be removed from the U.S. exchanges as everything's on the table now that they're retaliating. I mean, how can China retaliate? Because you're looking at a depression scenario. So what's the solution for them? One, bend the knee. You could do that many ways and sign deals under the table and claim victory. We fought against the U.S. and we won. And they sign something under the table and you do a trade deal and everything's fine. The other solution, the only solution that I see, is they're going to invade Taiwan. And that's when the shit really hits the fan. Because how does the U.S. respond to that? Especially since China, I know nobody wants to hear this, but if you look at history, they really have claim to Taiwan based on the Communist Party winning the decades-long conflict in 1949. They actually have claim to Taiwan if you look at the history. Everyone's saying they don't, but they actually do. How's the U.S. going to fight that? I mean, is it going to be embargoes? Is it going to be, is it a full-blown invasion? I mean, how does the U.S. respond to that? I mean, it's pretty crazy, but this is the scenarios that are on the table by China fighting us. There's no solution for them while they fight us. So what's going to happen? China market, I can tell you right now, China market, You're crazy being invested in that right now. I mean, the risk to it is incredible unless there's a solution, and that market is probably going to go up faster than everyone else. So it's very hard to play because there could be a solution in 30 seconds. If while we're doing this taping right now, Trump decides to say his Truth Social, hey, I just talked to President Xi and we're good. Everything's fine. We're good. I did it. I created this. Everything's great. Then China's market's going to explode. But if you really think that this tariff thing is going to be long and drawn out, China is the ultimate short here because, man, their lifeline has just been taken away from them, and they are sitting in massive debt. Real estate still a disaster there. Again, 10 days ago, their large developer just reports first loss since its IPO, first yearly loss. It's not getting better there. It's getting considerably worse. And look out if they continue to fight, because are we really going to remove every China-based listing, like all the stocks are not going to be able to trade here? Holy shit. I mean, we're really cutting off their lifeline. It's just hard to see how much they're fighting. I get it, the communists, everyone has an ego. You want to say it publicly, we're fighting against the U.S., but at the end of the day, you really don't have a lot of leverage. They don't have a lot of leverage, and they're going to go into depression if this happens, or you're going to see Taiwan get invaded, because usually war solves everything and could act as a diversion, but let's see what happens.
Yeah, I wouldn't bet on China yet. I mean, like I said, I always joke about this. They're communists. I mean, I love how the TV and we try to portray them as, fair trade or whatever. But yeah, communism is a horrible, horrible situation, people. I'm glad you said that about the treasuries and such, because there is some fear. Hey, and I'm not saying that that's not right to talk about and correct. And I think investors ought to brace. I don't think we're anywhere near close to the China-U.S. spat, because egos are too big to bend the knee. Trump, anybody could bend the knee. Is the odds that Trump will bend the knee? I think those odds are very low. President Xi, I think those odds are very low. So what happens? We continue down this path. And again, trying to put this puzzle together for you, Bessa, in the same interview, I believe you're referencing the Maria Bartiromo as well, Frank, where he did say everything's on the table regarding unlisting some Chinese equities. And if that sounds crazy, it's not. They just did it with the Russian ETF after Russia invaded Ukraine in 2022. So there's nothing new under the sun here, people. With China, Frank, or in that interview, Bessa mentioned a new buyer for treasuries, because Maria Bartiromo asked him, hey, is China selling treasuries? That's the big fear and passing point right now. And it's worth paying attention to. But Bessa said something very important. He said, listen, and he talked about this legislation and reconciliation and the debt ceiling and the tax cuts and all this stuff that they're doing. And he said that they are looking to change regulations, Frank. And he's going to change and I just escaped me, so I'm sorry to look like a fool here. But whatever it's called that they're going to change, supplemental ratio value or something, is to where the big banks can start buying treasuries and not have to offset capital to where that's on big. Their book.
That's huge.
And that is, and I'm not being a dick here, that is so much bigger than huge, it's not even funny. Because, again, in fear, go ahead and email me, Daniel@CurzioResearch.com, if you think I'm carrying the water for anybody. I'm simply telling you the game plan, because the financial media and the mainstream media, in my opinion, keeps yelling and screaming to you and me as viewers that there's no plan and this is just shooting from the hip. Scott Bessa just told you there's a plan here. Hey, we don't give a flying Florida if China sells everything. We don't care. We're changing the rules and regulations here in the U.S. that is going to allow the biggest and largest institutions to be and have an appetite, which we've regulated away from them. We have made it impossible or hard, or we've penalized banks for holding treasuries. And when I say penalized, it means because they have to put capital aside to protect that on their balance sheets. That's what I'm saying. And if you remove that, you will, in fact, see Treasury holdings go up at big banks. If for nothing else, as Frank just said, behind the deals, because we're not let in on everything. I hate to break that to you. But guess what? If you don't think somebody in the administration is going to go to Wall Street and the best bankster, JP Morgan, Jamie Dimon, and everybody else, and say, hey, go load up on Treasuries because we just changed regulation. If you don't think that that happens, I simply agree to disagree. We'll see the way it happens. But the point is that there is more to the plan than what may seem to be, and the regulations are a huge thing. Yeah, we have to wait for it. So asset prices are going to bounce around. And again, it's crazy volatile. However, continue listening here because that's the most important thing. But number two, This is the most transparent administration we've had in a long time. Go listen to them if you're interested. Double the speed up or times 1.5. But listen to Bessett and these guys telling you what they're planning on doing, and then navigate around that. So nowhere near done on the China-U.S. trade, in my opinion. I hope I'm wrong, but it's going to get much, much crazier from here and just grind trade to a slow a stop. Excuse me.
Yeah, and when it comes to gold and is buying going to come from China? Look, they have to pay their debt, right? The government's already stimulated the economy. And I saw Peter Schiff talk about this. Oh, they're going to sell treasuries and put into gold. They're selling treasuries not to buy another asset, but to pay their bills and to pay down their debt. That's what they need to do, especially since growth has come to a crawl and it's going to come to a halt almost for them. So, are they going to take out 700? Again, they wouldn't do it at one time. And this has been a slow draw for a while. But for those who think they just go, the fact that currency is pegged to the U.S. and it's going to hurt them, you're going to shoot them in the foot. Yes, they could see a slowdown in that, but it just doesn't make sense. And to assume that that's going to go into gold, and which pays no interest, and some of it has been going to gold, but it's just crazy. So when China needs money, what are they going to do? They're going to be forced to sell their assets, which is treasuries and gold. And I can tell you, if there's a print that comes out that China sold gold, it's going to go to like 2,800, 2,700. It's over 3,000 still. It's almost 3,100. It's high. It's closing in on its highs. Its highs was like 3,150, 3,175 around there. But if there's a headline that comes out that says China's selling gold, you're going to know why. Because they're broke and they have no money and the government has already stimulated as much as they possibly can. They could keep going and going and going, but eventually they're in a deflationary environment and people aren't going to buy shit if they think prices are going to keep coming down. That's the way it is. And prices keep coming down, and now you have no demand for your product. So what's going to happen? You're going to have a massive amount of inventory, and some of that's timely. Yeah, they sell toys and shit like that and whatever that can stay on shelves forever, but some of it's probably timely. That you're saying, okay, this shit's sitting in barges right now. And yes, we shipped as much as we possibly can to get ahead of the tariffs, but what about like the next couple of months just keeps going, which China wants that to happen by retaliatory, right? You're just going after and saying, hey, we're going to raise tariffs on you. Going to keep raising tariffs. Like they're not in position to do that. And whether they like it or not, but it is a crazy market. And again, a lot of this stuff could be erased. One of the companies at the most risk when it comes to China tariffs specifically, because I think when it comes to Mexico, I think he said there's 70, I think the administration said there's 70 countries talking to them right now. And I'm sure Canada's going to be okay. I'm sure Mexico's been doing the best job because, the president's been like, okay, whatever we need to do. And it's been fine with Mexico. And I'm sure we're going to get that way with Canada. But China is, you don't know. Like China's the biggest uncertainty right now. Even Europe, and they retaliated, but not really. They're not in a position to really retaliate either. It's not like we buy a lot of goods from them or they buy a lot of goods from us. But when I look at China, the biggest company at risk is Apple. And you're seeing Apple come down a ton. And I have to tell you, I'm doing analysis on Apple. By the way, they were the largest company in the world. Now it's Microsoft again. Microsoft is the largest market cap in the world. I can tell you something about Apple. I don't know if its price in the stock has come down. What I could tell you is their estimates are way too freaking high. I mean, there's 38 sell-side analysts that cover this stock. Only 8 have lowered estimates in the past 30 days. In the past 30 days since tariffs, all right, since these things have been announced. So you look at 2025 earnings per share consensus of $7.25. That implies 8% growth year over year. There's no way. I mean, there's analysts out there and people who are very in the know saying that their numbers could be impacted by $1.50 from where it is right now. If that's the case, Apple is extremely expensive here. They're not really pricing it in. They're hoping, hey, this shit's going to end and we're going to be fine. But I could tell you, nobody's pricing in Apple. I mean, forget about $7.25, but at $6 or under $6, you're seeing, a massive slowdown. And we've already seen a company that's having trouble selling iPhones right now because you're really not changing any of it. And you just lied to the public. And if you go into all these stores, T-Mobile, AT&T, it's going to say Apple Intelligence, which is full of shit for the iPhone 16, right? They probably didn't lie to you on purpose. They really thought they'd have something. They're like, oh, we're going to push that out to 2026. It means everyone that just bought this phone was expecting, all your AI features. You're not going to get it, right? So that's going to result in a slowdown. Plus, you lose credibility, which Apple I don't think that's happened to Apple over the past 10, 15 years. It's one of the best consumer-related companies, which you get exactly what you pay for. No one gets an iPhone and say, holy shit, I can't believe it was $1,200, $1,400. You get what you pay for. Customer service is great. If you ever have something where, you subscribe to an app and they automatically charge you, it's like, it's kind of like Amazon. If you get something that and you don't like it, you could say, I don't like it. They're like, okay, just send it back right away. Here you go. It's very easy. I mean, Apple's a very good company that consumers love, that consumers trust. And right now, you kind of fucked them, right? Because you lied to them. And now you just said, wow, all these, there's no difference in this phone other than the Apple Intelligence from the previous phones, which is why they don't need to come out with a phone every year. We know why they do, because it makes more profits for them. It's not for the consumer, of course. I don't know how... you could already see with your camera if you're taking videos with the video feature. If you want to take, if you use
not
the
mine,
video,
Frank. I have an 8+.
An 8+. Jesus. Actually, it's getting to the point where that's probably going to be worth more money than the new phones because it's an antique.
Well, it's getting to the point where not everything updates. I need a new phone soon.
I think that stopped. Yeah, I think it's at the 10 right now. They stopped updating. The 8 is pretty crazy. But I can tell you what Apple right now, it's their 725. That's the actual earnings estimate they're expected in 2025, and it's over $8 in 2026. They have to come down, and this is based on them reducing the share count by almost 5% due to buybacks. So, which they buy back, they generate, tens of billions of free cash flow and buy back the stock.
A lot more stock after it drops 25%.
I know, and that's something to question too, because all these companies, how much stock did the Big Seven? The Mag 7 companies buy back, which look like great buys. They look like fantastic buys. Now they're down 30%. I mean, how much did these companies buy back? And that's why I was looking at GM saying, listen, these guys bought back a hell of a lot of stock over 50. And now this thing with everything going on with tariffs, forget about earnings being like, it's trading at 4 times, 5 times earnings. It doesn't matter if you're trading at 2 times earnings compared to the S&P trading at 19 times forward earnings, because if your earnings are going down, it's a value trap, which that's what you're seeing with autos. And you're looking at autos with Ford and GM. Again, more estimates. They need to come down. Analysts finally cutting estimates, downgrading these names. Bernstein today downgraded Ford to a sell, target low to 7. And they said it's a significant downside not priced into the market yet. You had Cramer come out today and say, Ford's a value trap. Now it's a value trap? Really? Come on, Jim. Anyway, this is something we were talking about.
Better his Black Friday comment he made, or Black Monday comment he made on Friday.
Oh, did he? What did he say?
He teased on Friday last week, so markets are crashing. He teased that we were setting up, not teased as in funny. He was being serious. He was on his fucking Florida rant. And he said, we're setting ourselves up for a Black Monday, which is the least valuable thing he could do, which is why I went to X and put a tweet about how he's the biggest blowhard in financial media. I hate to be rude, but when you literally are just jumping on the panic wagon, when you're on TV and you're a big personality, it was beyond pathetic. Beyond pathetic, Jimmy Cramer.
Jim is very emotional during down markets.
No shit.
Because he's the biggest perma ever as someone that worked for him. And it's good because he's an optimist, right? And listen, he's been on the Mag 7 companies longer than anyone else, and he's been right on a lot of things. I know people, rip him apart because he talks about a lot of stuff and everything. And it's easy to point to so many things when you're talking about literally thousands of stocks every single month. And I'm not even joking because we had to analyze and look at that when Barron's went to review his performance when I used to work there in 2010, 11, 2009 and 10. But, it was, we went back and saw how many stocks he talks about. It was over 1,000 stocks, right? 1,000 different companies. You're going to be wrong on a lot of them. So, you're going to be right sometimes too. But he gets incredible. Like, he is the ultimate contrarian, I think, when he comes out. So, when he gets extremely bearish, he's only bearish. I don't think I've seen him bearish longer than like a week or two. And since I've known him, and this is 20 years, I've never seen that. Just because he's the ultimate optimist, which isn't the worst thing in the world. It's not a bad thing. But
this has nothing to do with optimism. This was just being
it's not
headline grab them, and this is just piling on and trying to get clicks and stuff. Which, hey, we're all in that game. I get it. But just invaluable as possible. The most invaluable advice you could give. Let's say that. Nice.
I love it. So we're looking at companies, especially Delta. Delta removed its guidance and said, hey, we don't know what's going on. And we're just starting earnings season. We just started earnings season. Okay, the banks are going to report pretty soon, right? So are they reporting this week or next week, right?
Friday.
So you're going to see the banks reporting, and all these companies are going to report. And now what these companies did, especially with Walmart, what happened with Walmart? Let's see right here, because Walmart came out and said, look,
they're doing an investor day. Sorry.
Yeah, they're doing an investor day. And by the way, their investor day was very, very positive because they're like, look, we've been through this shit. We know how to handle it. And
Walmart.
they're like, we know how to handle it. We're just going to squeeze all of our suppliers. Like Amazon, when you're the biggest company in the world, they're like, hey, you know what? Those margins, you're not going to have them anymore, buddy. Sorry. And they're like, well, I don't know. You're going to lose your biggest partner. Right? They're going to shrink as much as they can. But, you just have so much power over all your suppliers when you're a Walmart, when you're a Costco, when you're an Amazon. And those companies know what they're doing because they've been through this already. Where a lot of companies haven't been through this already. It's why some of the companies, there's a reason why if you're looking at technology companies that have the strongest balance sheets in the world is because they've been through the dot-com crisis and came this close. The ones that survived, this close. The Netflix, the Microsofts, the Apples, this close to being done. Because they were so leveraged, they thought like, oh my God, this growth's going to happen forever. It's great. And then you had this 3-year drawn-out crash when the NASDAQ fell 80%. Over a 2.5-year period. Imagine that. Now things fall 35% in 3 days, right? It's different, right? We have different markets and they rebound right away. Like we saw COVID, 34% drawdown in a month. And then, that's the bottom, right? So we have these massive sell-offs, and maybe that's triggered by algorithms, but usually these steep sell-offs, if you're looking in the past, steep sell-offs like this, if you look a year later, almost every single time stocks are higher. Doesn't mean that that's going to happen. But I could tell you this. Right now has been one of the greatest times to invest where you miss so many companies and so many large caps where everyone wants to take on risk. The richest people want to take on even more risk. That's based on my experience where they love taking on the risk in private companies and going all in and trying to become 9 times richer than they currently are. You don't need to take on extra risk of, trying to find the greatest small caps, which I've done all my life, which I'm doing right now. Because when you see large caps down 30%, when you see NVIDIA with the company that they report, the numbers they reported last quarter, and that stock has gotten annihilated. When you see companies like Johnson & Johnson where it's trading at, when you see companies like, the Philip Morris is trading at, we see companies, McDonald's has held up pretty well, but you're able to buy some of the best of breed names and you could get returns of 30% over the next 12 months. I mean, I would put together, and maybe we'll do that, Daniel, especially for premium members, put together 10 stocks that you would own right now. The industry leaders that are down tremendously. And they're not down because their numbers are horrible. They're down because of this huge uncertainty, because there's a lot of forced selling going on in the market. And that's when you want to buy. So the greatest investors, even Warren Buffett, I could tell you that's another catalyst that no one's talking about. How much do they have on their balance sheet? Was it 300 and something billion on their balance sheet?
Yeah, it was 300. Well,
holy
last
shit,
I knew it was
right. I mean, you didn't like anything, but you got to like a lot of shit right now if you're Warren Buffett. I mean, his managers have to be like, holy cow. Now we could. I mean, they could dictate the terms. They can get warrants on anything they want by financing companies. I mean, the companies that are struggling right now. It's, imagine the lifeline you would get if you invested in Ford or GM right now. I mean, you would say, well, and again, I'm not that I want you to invest in Ford and GM, but if Buffett comes in, he's not going to come in as an investment like you and I would come in and say, I'm buying the stock here. No. He doesn't do that. Now with Goldman Sachs during a credit crisis, he's like, give me a shitload of warrants. Yeah, he's going to lower his risk to basically zero, right? He's going to be able to finance a company at nothing, bonds, everything. I mean, the terms that he could dictate going into a Ford and GM, they would love to offer that because it's going to put a bottom in a stock like that. And he has the money to do that. We're not talking about those cows, but they got to be foaming at the mouth saying, okay, now it's time to buy some shit. I mean, because the market has come down. Some names have come down. He's been pretty bullish on oil. It's in the 50s right now, oil. Holy shit. You want to talk about something that we definitely didn't see
coming.
Making me
look bad.
We didn't see coming, right? Holy shit. So, in the 50s. So there's going to be lots of stocks and lots of names that they're looking to buy. And one thing's for certain is the companies that are getting hit. I was talking about Walmart. Walmart removed their guidance and Delta removed their guidance. And what's happening with those stocks right now? So when I let's look at Delta first, and this is right now doing this midday, it is up almost 7%, right? So we have Delta up almost 7% after removing guidance, saying we have no idea what's going to happen in the future, and it's up. Now,
but like you said, it's also down 50%.
Why? So that's what you got to look at the expectations, right? Because if you look at it, it was almost $70 a share, right? And it was $70 a share not long ago, I don't think, right? So you don't have to go back for the year. You have to go back to February. Holy shit. Is that right? Holy cow. February was $70.
Everything was higher this year.
Yeah,
January and February was high.
I just thought like if February was like, I didn't know. I thought it was like 6 months ago. I didn't know it was like freaking, less than, just 2 months ago.
No, Frank,
so
it just seems like last week was a month ago.
But still you have that uncertainty. And then you have Walmart come out and say, hey, we're moving operator guidance for next quarter. And that stock's up 4%. So what you're seeing right now is what I love, guys, is you're heading into earnings season where companies basically going to remove their guidance and the risk is almost priced in. It's it's worth buying the stocks, especially industry leaders that have been cut by 30, 40, 50%. And I would be betting on short-term price movements that things are going to go higher when they report. I wouldn't be doing the banks. The banks haven't got hit as hard, and their earnings are going to be great because interest rates are staying higher for longer. These guys make a fortune. I mean, just the top four banks, over $100 billion in profits last quarter. I mean, not profits, in revenue last quarter. I think it was over $30 billion in profits. They're massive. They talk a game like, oh my God, the economy's cracking. They make a freaking fortune, an absolute fortune, the four largest banks. And they can never be penetrated because of the laws. Right? It's the only industry in our world that cannot be not in our world, but in the United States that basically those four have you can't penetrate those four. You can't start from scratch. IPO and become an open AI and dominate an industry, or Facebook and dominate the industry into Meta or Google. You can't do it in the banks. The laws don't allow you. The bigger you get, the more you get punished. The more the capital ratios increase and you get fucked. That's what New York community banks are. So when I'm looking at companies going into this quarter, expectations are that freaking low where you can remove your guidance and your stock's going to go up. I mean, you're seeing little downside risk if you're seeing companies reporting. It could give you an opportunity for short-term trades and say, look, what's worse? You tell me, what's worse than removing your guidance? Other than saying that you have to restate your financials. There's nothing worse than that. There's nothing worse. It's not negative guidance. It's not even negative.
Our accounting firm resigned, and we're delaying our filings.
We're delaying our filings, and we have no idea. Our financials for the past 10 years are unreliable, and we have no idea what's going on. And we just let go of the CEO. Okay, that's the worst news possible for a company. Other than that, it's removing your guidance. Yeah. You're just telling me two companies removed their guidance and their stocks are higher. What's the risk? I
think everybody's pricing in. Anybody that gives guidance is just silly, unless you have great guidance, because there's no risk reward. There's no
right.
benefit.
I agree with that. There's no benefit. I'm just saying, if that risk is really priced in, then
it sets up for good.
What happens if the company does offer positive guidance and say, hey, this is what we did? Like that's what Walmart actually. It's not just they removed their guidance, but they said, hey, we've been through this. We have our steps that we need to take, that we know we need to take to pretty much, mitigate the damage from these tariffs. This is what the biggest companies do. They see this coming. They're able to adjust. I mean, Walmart, you're talking about during COVID. Do you remember that? They had the biggest drop that they've seen in a company's stock. I don't know if it's history or if it's like 20, 30 years. They had a massive amount of inventory. You know how long it took them to clear off their inventory?
Well, no, not
1 quarter.
Well, they were the only ones allowed open.
1 quarter.
Talk about picking. Yeah,
1 quarter.
I get it. But
holy cow. No, this is why.
When you're the only one allowed to operate, you're going to burn through your inventory.
Even not even during COVID. This was 2022 when it shit hit the fan with all inventories and then demand.
Gotcha.
2022. Now, I mean, said not COVID.
Oh.
But you talk about 1 month, and yes, they got the lifeline. And we recommended the 5 companies that got the lifelines. Whatever it was, Costco, Target, and during COVID, like early COVID, and we did well on those names. Walmart, God, Home Depot. What a fucking joke. We're going to close all mom and pop stores, but we're going to let 5 stores stay open. It's so great the way they did that. But, when it comes to Walmart, 1 month, 1 quarter, it took them to get rid of their inventory. Target, it took a year and a half. Nike still has inventory problems. I mean, you look at companies. So when you're looking at these big guys and how quick they could adjust to this, it's pretty amazing. So I don't know if you're looking at Walmart, you're looking at Costco's. If you really want to go to retail, you go Amazon's. Those are 3 companies that make a lot of sense. But this is some of the things we're looking at right now. Is one, a trading opportunity to be able to buy stocks into earnings, because if they're removing their guidance, which is the worst thing you could possibly say, and the companies are going up on that, what's your risk? Because your upside is tremendous. If they report really good numbers and say, hey, we've been monitoring this. We knew this was going to happen, and we don't really have it at that much exposure as you think to tariffs and overseas shit. And our numbers are up, and they're raising guidance. You're going to see a company pop 20% on that news, probably within a half an hour after they report, maybe minutes after they report. Probably a good way to play this market, I think, especially since you're taking a lot of risk off the table with Walmart and Delta removing their guidance and going up today, which is pretty crazy. Again, crazy earnings coming out too. So,
yep. Crazy.
So what else do we have going on in the markets today? Other than the markets, I know that we have a huge event, which is called the Masters.
That's not today.
It's tomorrow. I can't wait for the Masters. Masters is so cool.
That is exciting.
It's awesome. And what are you doing? You're traveling, right? Are you traveling? Where are you
Yes. I leave for Vegas tomorrow evening. Markets always crash when we travel, I guess. I haven't traveled that much. But yeah, I go to Vegas tomorrow night. And then I'm there for a concert on Saturday, and then I'm back Sunday.
What concert?
The Eagles.
That's awesome.
The Eagles, and I'm excited. At the Sphere. Very excited about that.
Yeah, it's a really
But I don't leave until tomorrow evening, so I'm excited about Wall Street Unplugged Premium first, Dollar Stock Club, Subscribers will get an update a little early. We got a lot to do and navigate. But yeah, then I am excited to head out to Vegas. I get there tomorrow night at midnight Vegas time. So that should be like, then that when everything starts going. So I'll just hit the strip and check my laptop Friday morning.
No, I know. That's cool. That's cool. So listen, guys, the playbook is we're looking at stocks that are down tremendously, right? We have a good short-term opportunity since a lot of that risk we feel like is already priced in some of these names with Delta down 50% off its highs and saying they removed guidance. But more importantly, what are names that are going to see that earnings power, that are going to be able to grow earnings that are down tremendously? They reported good numbers last quarter. You don't really have to take the risk of buying all these crazy companies and small caps and stuff like that when you have the largest companies in the world trading at a significant discount. If they can provide you 15, 20% returns in 12 months, I think a lot of these stocks can. I would say there's a good 2025 that can, that I've been looking at. Makes a lot of sense. And also be aware, I'm not telling you to short Apple. I'm just saying they have tremendous risk. But the companies with the most risk from tariffs, and we cited them. If you're looking at, especially with China, if you're looking at Starbucks, you're looking at Nike, you're looking at Apple as well. Levi's has a lot of exposure there. Companies have a lot of exposure to autos and stuff like that. If you solve or if you come up with a solution to the tariffs, these are the names that are going to absolutely take off. So be careful if you're shorting them. If you really believe, okay, if you have a feeling, if you have a contact, if again, it's very difficult to forecast the future, obviously. But if you really believe, okay, this tariff thing is going to end in a month from now, Apple's probably the one you want to buy. Starbucks is the one you're going to buy, especially if you believe that something's going to happen with China or an announcement's going to be made and they're going to say, okay, hey, we worked out a deal with China, and there's so many ways you could work out deals with China. There's so many ways the U.S. could work out deals with China. And China could say, hey, we're going to give you rare earths for cheaper prices or whatever. There's just so much. There's just so many things on the table that you could do to just say, okay, we're going to get along. If that happens, the ones with the most exposure that have gone down the most, these things are going to absolutely take off. And just be careful shorting them, or if you want to take a chance on them, it might be worth it considering a lot of the risk. Again, when you're looking at JetBlue, God, JetBlue, I hate that company. I don't know why I say JetBlue. If you're looking at Delta, and if you're looking at Walmart, again, pricing in at that risk of removing that guidance, it definitely provides a huge opportunity for you. So that's what we're looking right now.
Yeah, there'll be plenty of volatility and opportunities for traders, but I just think they're going to be very short-term trades until we get more clarity.
Definitely more clarity. And even I'm going to really, really start digging into oil companies, started picking away. We got some oil exposure and stuff, and some of these names we've done well in. They pull back a little bit. But, man, I would think oil right now and a lot of these companies at $58 a barrel, I don't think the larger companies have to be looking at some of the other companies to really take over. They always do. If you're looking at Exxons, you're looking at Chevrons, what do they do? Whenever they see this pullback, I mean, no one really saw the 50s coming. We definitely didn't see the 50s coming, but who knows? I mean, there could be a four handle on this. If you see that, these guys are always great at purchasing assets at dirt cheap prices. They wait for this. They wait for this every 5 years, 10 years. I mean, it used to happen every 4 or 5 years. Now it happens every 10, 12 years. I mean, COVID was the last time it happened. Before that, it was 2011. 10, right? And so they're looking for those assets as well. Again, trying to find pockets of growth that work. I think gold is going to work as long as you don't see a headline saying China's selling gold, because they may have to sell gold. They may have to sell their treasuries. And it's not to go into other assets or vice versa, selling treasuries again to gold. They have to pay the fucking bills. And they just got their growth totally shut off, which is their whole entire thesis. So I don't know how any hedge fund could own China right now, because their thesis was based on this massive stimulus plan that's going to lead to huge economic growth. Now Goldman Sachs, they're not raising their growth estimates for the year for GDP. It's 4.5%. If it's below 5%, that's very, very bad. That's the benchmark. Last quarter was 5.4%. That's why China took off and started going higher. Now you're taking that off the table. Be very, very, very careful with China. If they continue to fight, they're at the highest risk of going into depression, to the point where they might see negative GDP if they continue to fight us for longer than 3 months. It would be an absolute disaster, because they're already in a disaster. It's already horrible there. For you to remove all of that growth and cut off their revenue, it's almost like you lock down China. It's like China's in a lockdown right now. That's how crazy it is. So let's see what happens. Yes, they have other outlets to sell some of their goods and services to other countries, but it's not like they do when they sell to the U.S. That's why they have such a great surplus. But it will be interesting to see how this plays out next couple of days, next couple of weeks, but we'll be here for you. You can email us at any time. Again, difficult times, but you want to try to find opportunities, especially when asset prices are 20, 30% lower than they were just a month ago. That provides you a good opportunity. So Daniel, questions, comments?
Be cool. Daniel at CurzioResearch.com.
You love that. Be cool.
I do. I'm a child. I'm going to fucking say that forever. Be cool.
Questions and comments for me. Email me here too. FrankCurzioResearch.com. As always, we'll talk to you guys actually tomorrow for our premium Wall Street Unplugged premium services. We'll see you then. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. Put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. Including the big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.